XRP is about to break. The energy under this chart and the moves that just showed on the tape is like a pressure cooker. For this one, you should sit down, get something cold to drink. We're going to start right away. Canary's XRPC volume went up. Okay, take a look. A lot of people were dealing Canary's XRP ETF. When I woke up, it was marked with the ticker XRPC. 84,000 people bought 84,000 shares. That's worth more than $2 million and will be paid out right away when the markets open. Guys, that wasn't just a random rail rolling out of bed, out of fear of missing out. That looked like it was planned. It looked planned. This is what you see right before an asset that has been held back thinks it's had enough of pretending to be dead. That's why this is important for XRP. When side ecosystem liquidity blows up all of a sudden like this, it usually means that insiders are positioning early. Do you think they're smelling something? They are getting ready for something. You don't drop $2 million when the market opens in the hopes that something will happen. That's what you do because you know what's going to happen. But now comes the crazy part. This isn't even the big signal. Most people won't know what they're seeing until the moves happen. But why didn't the price move, is what most people are asking. Wait a little while. It's been 3 days since this happened. Breathe. It's going to happen. It's just one of 24. Take a moment to think about that, everyone, first. Let's talk about how to stay ahead of moves like this and not be months behind the crowd. Join one of those one-on-one calls and make sure you're on the newsletters. Those links are all down below. Things are going to get really crazy this week. What can I say? With all the ETFs we have planned, it's going to be crazy. Then take a look at this. When you were looking at that XRP ETF chart spike from Canary, we came through with the big one. Frankie T is coming. That's right. Do you ever see a set of prices that looks like it's been wound up for too long? Like someone has been sitting on a beach ball underwater for so long that their arms are shaking from the strain. That's XRP at the moment. You know what happens next every time XRP gets squished like this, every time there are long periods of sideways chop, these tiny candles, and falling volatility. That's how the coil breaks. XRP doesn't make small moves when it does. It jumps levels very quickly. The way things are set up now, it feels like the same energy we had before 2017. It's going to be Franklin Templeton, and they expect to sell between 150 and 250 million XRP ETFs on the first day. This is about a business that has more than $1.5 million in assets, $8 trillion, million, not even a million. We're talking about $1 trillion. Also, check out Canary's site here. The ETF is there. There are still about 4 hours of trading left, and this thing is already selling over $445 worth of ETF shares today. There were over 11 million in trades in the first half. We're on track for another $20 million day. This is one. Do the math in your mind. What happens when we have 5 and 10 and all 10 of them do 20 million? How much does that equal? Now multiply that number by how much XRP is taken off the markets every day. Now multiply it by 1 month, 6 months, and a year. You can see how quickly things are getting worse. Then we have this Michael Saylor dude. He's only going to fuel the fire. Why not? The stock markets are booming. He should add some gas to it. Michael, holy crap, that pretty much says it all, doesn't it? He stepped in, though. Do you remember what he said? The same thing I've been telling people. There is no longer a 4-year rotation. Also, Bitcoin is going to go up from here. Take that in. Here is where you can hear Saylor. What do you think the next step is for Bitcoin's price? What will happen if it drops even more? I believe things are safe at this time. In other words, most of the clearance sales are done. From here, I think we should get together. Then where do you think it ends? Not at all. But I don't believe in 4-year cycles either. I mean, I never thought the 4 were real. I think they might have been right for the first 12 years, but I think the 4-year cycle is based on the idea that 225 Bitcoin are taken out of circulation every day. That's $22 million or $20 million worth of buying. Believe me, $20 million bought $100 billion worth of goods yesterday. 20 million isn't even a third-order problem right now. Yeah, the way the market is moving makes it more likely that Jerome Powell wants to keep interest rates high for longer, right? It has to do with politics, economy, and structure. It only took 4 weeks for IBIT's swaps market to grow from 10 billion to 50 billion. So, when JP Morgan offers 10 or $100 billion in loans against Bitcoin, that will be a lot bigger than the 4-year cycle. Right now, the future of Bitcoin depends on what the big players in banking do, and everything else looks good. People should first know that they are traders if they make decisions with a time frame of 12 months or less. Traders are aware that they are traders. I don't have any advice for you. I don't trade. I can't trade well. Yes, I don't claim to be. I don't have any advice for you. If you're an investor or a startup, on the other hand, you should have at least 4 years to think about it. You have to love the confidence. If you listen to the guy with the most constant record, the king of laser eyes, they say that the old market rhythm is over. Who do you think will gain the most if Bitcoin breaks its old cycle? The one that has been behind without a good reason. The one that has been slowed down by cases, delays, and rules that are hard to understand. The one with a huge group of angry people looking for a reason to believe again. Yes, we are talking about XRP. All coins don't just follow Bitcoin when it breaks beat. They blow up, especially the ones who deserve to be angry here. Aren't we still not done? Because we're going to talk about the big storm next. That's right, it might light up the whole place. Today we're going to talk about the 4-year cycle since we asked ChatGPT about it. It was meant to help us figure this out. Does what Michael Saylor say about the cycle of 4 years ring true? AI was asked. We know AI is very strong. We know they're strong here. That's why we asked. This is what they say. Let's draw attention to the beginning of this. In this article, they say that the old hype, mania, crash, repeat pattern worked when Bitcoin was small and contained. There are a few dens and some offshore platforms that trade against each other, but mostly retail traders. People say that world is gone, and this is what ended the 4-year pattern that led to the first part. Retail is no longer in charge. Wall Street is. A lot of people have heard me say this on this station for a long time. These areas are no longer affected by retail. It's all about Wall Street. Once you had money from BlackRock, Fidelity, Franklin, Hamilton, JP Morgan, national wealth funds, pension funds, and insurance companies. If we had retirement money coming in every month and put billions of dollars into Bitcoin through controlled ETFs, Bitcoin would stop acting like a toy. Everyone. This is steady desire from institutions, not a bunch of guys waiting for halving season. That brings us to the second part of this. Bitcoin went from being a fantasy asset to a real asset when the ETF was created. When Bitcoin prices moved before ETFs, it was all guesswork. It moves more than gold, bonds, and stocks today, and it does so with macro sensitivity. ETFs make it easy and legal to invest trillions of dollars in Bitcoin. This isn't just one line item in a huge macro machine. Now we'll talk about the supply shock. ETFs don't buy when the market goes up or down. Every day, they buy. They buy every week. They buy every 3 months. When new assets under management start to come in, the side drops that happened every 4 years stop happening. Now there is a steady net demand for ETF entries, hitting a fixed supply. That shock will never go away. Now we'll talk about the balance sheets of businesses. With just MicroStrategy, they broke the old loop. With the micro approach, they buy when the market is empty, when it's rising, when it's falling, and when it's rising again. There are no natural changes here. Corporate buyers change the whole spread. There is no such thing as a neat 4-year loop. When one company buys billions of dollars, no matter what the cycle is, the cycle flattens and macro events take over. This gets us to the point where Bitcoin matures. As assets get bigger, they stop acting like little kids and start responding to your money supply, interest rates, liquidity, risk prices, and global flows. Bitcoin is no longer a heaven coin. It is now an economic asset. Fixed cycles are broken by macro, which takes us to 2024 or 2025. Take a look. It reached a brand new all-time high before ETFs brought in more money than gold in their first 100 days. It's not like prices adjusted like they have in the past, is it? Sideways movements are a race that is driven by macros, not by having driven. Things would be very different right now if the 4-year pattern was still alive. Also, guess what? We're not. All of you know that the 4-year run is over. It's over. Since we got to ETFs, it's over. Bitcoin is no longer an item sold at shop kiosks. It's being bought by institutions with long-term goals, tons of cash on hand, no feelings when trading, and billions of dollars in dry powder. They don't care that you have jokes. Okay? So what do you know? Sailor's right. Also, what I told you about the 4-year patterns is no longer true. That has changed because of ETFs. You can also see Bitcoin breaking its all-time high for the first time ever. Now, get ready for a very busy week. On November 19th, the FOMC will be the first official meeting of the Fed this week. The next day, on November 20th, we will get important data on the US job market. Do you get what I'm saying? This is basically a machine full of life, once. When the lid is off, these kinds of big events stack up, and one or two things happen.